Last week, we looked at big tech's Q1 earnings. Google hit all-time high profits. Amazon is building sponsored prompts into AI conversations. Meta raised its ad prices and grew its revenue 33%. If you heard that episode and thought, how did we get here? This episode is the answer. This is a Digital Reset Foundations episode, a conversation I recorded in April that I think is as useful right now as anything I could record brand new this week. The reason I'm bringing this one back is simple. Big Tech's Q1 earnings didn't surprise me. After you hear this, they won't surprise you either. Big Tech has built their businesses to extract more money from you and your business every single day. Gatekeepers go to gate and all that. Here's the episode. I think it'll be worth your time whether you've heard it before or not. Let's dive in. You heard me talk about City of Hope and the fact that they show up in 97% of AI queries for their specific category. Well, City of Hope did not have a GEO strategy. They didn't hire an AI optimization consultant. They showed up in 97% of AI queries for their category because of decisions they made 10 years ago, 20 years ago, 30 years ago, or more. That should tell us something about what AI actually rewards. AI inclusion is an inheritance. It's not an acquisition. City of Hope inherited their position from years of peer-reviewed research, independent media, and an earned reputation with their patients. The AI was trained on all of that. Most GEO strategy, quote unquote, is sold as something you can acquire this quarter. But if AI inclusion is primarily inherited from prior fundamentals, that changes and should change your budget discussion, your budget conversation. AIs see a weak signal, a contradictory signal, or no signal, and it loses confidence in your brand. When an AI sees a strong signal, a clear signal, a coherent signal, that's when you win. The brands who are showing up today, the brands who are showing up consistently today, are showing up because they've built brands worth people asking for by names. By name, this is what I mean when I say the brand is the prompt. But also brands that are worth answering by name, that the AI can confidently say as a concierge, I know the answer to your question. I know who you should be talking to. Winning in the long run isn't just about what you do this quarter, it's what you do for a long time. If you go to your AI of choice, it doesn't matter if it's Google Gemini, it doesn't matter if it's ChatGPT, it doesn't matter if it's Perplexity, it doesn't matter if it's Claude, but go to the AI you like the most and ask it to describe your brand. Everything it gets right is a sign that you have a strong signal. Everything that it gets wrong or hedges on or isn't quite clear on, that's where you have a gap. And that's your roadmap. You don't need a vendor to do an audit. The AI itself is going to tell you this is what it knows to be true about you. That's really, really key. Now, the most common gap is when you say one thing about your brand and your customers are saying something else about your brand. It sees a difference between your statements and your customers' reviews. That's a huge contradiction, and that means the AI will lose confidence in you. It cannot confidently recommend you to a potential customer. Note that this isn't just about the discussions that's happening on platforms that the AI trusts. It's not because they're bad, but because you have never done the work to build review velocity for your business. It's that you haven't worked to gain the earned media presence that gives the AI some corroborating evidence beyond just what you say on your site or beyond just what it sees in reviews. Neither of those gaps is going to get solved by a GEO vendor immediately. Both are solved by doing the same things that improve your direct business, giving a better customer experience, gaining better reviews, and building clearer signal. I've worked with businesses to reduce their dependency on big tech companies over the last 15 years. That's through Google updates, through the emergence of OTAs, through social reach, and now AI. And what's interesting is how this era looks similar to what I've seen before. In the book, Digital Reset, I talk about a pattern that happens. A new discovery channel emerges. Something comes around that we go, oh, this is cool, we should check this out. We get good results from it early. We test it and we see that this is really working, and usually at a pretty low cost. Over time, the platforms with legs grow more dominant. They build a bigger base of customers and often send more customers your way, usually at a pretty low cost. That's super attractive. So you double down on that. You dive in even further until suddenly that becomes a major source of your business. But at that point, that puts them in a position of gatekeeping power. And as you've heard me say many times before, gatekeepers go to gate. They have to. They are required to, because they owe it to their shareholders to monetize the traffic and the connection that they have with customers to grow their revenues and grow their profits and grow their shareholder value. And so what happens is the gatekeeper then raises the toll to you. And this is a vicious cycle that occurs again and again and again. We've seen this repeatedly with search, with social, with mobile, with OTAs. It happens consistently. Every time there's a new platform shift, there's a window. It could be 2 years, it could be 3 years, it could be 5 years, where the new gatekeepers are still building their position, and they haven't yet started collecting the highest tolls they can. That's huge, because people look at that and marketing leaders look at that and say, this is a great opportunity for our business, right? And that's good. That actually is a good idea. We saw this, I'll give you a real world example, with independent hotels and hotel brands even. They had an opportunity, they had 2 opportunities to build direct booking capabilities and direct booking connection with customers before OTAs became kind of non-negotiable. First, before September of 2001, then in the later aughts. The ones that took advantage of those windows built direct websites. They built email lists. They built loyalty programs, either recognition programs or reward programs, to connect directly with customers and gain data. And they built direct revenue. The ones that didn't do those things are still paying 20% commissions as table stakes for 35, 40, 50% of their business. That's not a great place to be. The boutique hotels that appear in ChatGPT answers today for questions like the best independent hotel in Charleston, or the best independent hotel in Orlando, or the best hotel in those cities, are there because of the reviews they've been gaining for the last 10 years, for the content that they've been publishing for the last 8 to 10 years, for press coverage that they earned 5 or 6 or 7 years ago, and every year in between. They're not there because of some AI strategy. They inherited that position because they had an overarching brand strategy and an overarching strategy of how to connect with their customers directly every single time. The hotels that went all in on OTA distribution, the retailers that outsourced their audience to Facebook, the publishers who handed their traffic to Google, each of those folks made, I want to be fair, a rational decision in that moment. It wasn't a mistake in the small terms. But the problem was that they didn't own anything when the platform changed the terms of the relationship. So the question that I would ask is whether we are seeing a different game or whether it's the same game with slightly different rules. Spoiler alert, I think it's the same game with slightly different rules. There's definitely new things happening here. Artificial intelligence, AI answer engines, and AI assistants, and AI agents as they arrive are weighing things like corroboration quality. Is your story being backed up in other places more than just did you get a bunch of links, right? It's much harder to game that with volume or technical tricks. In that sense, AI is doing what search has always supposed to be doing before they had to spend so much time fighting, black hat SEO types and people trying to game the system. Candidly, one reason why I'm so bullish on Google, it's not the only reason, but one reason, is that they know what getting gamed looks like. I've argued that many of the AI answer engines right now are doing speed run through Google's search spam learnings, and that they're going to have to make changes that Google's been making for years. At any rate, what hasn't changed, though, is expert authored content. You're familiar with EEAT, probably from Google. Expertise, experience, authority, trust. Companies and businesses that have built that expertise and have built that authority and have gained that experience and have gained that trust are the ones doing well. What also hasn't changed is independent validation and trusted platform reviews and a strong, well-regarded direct brand that follows from those. Those drove organic authority 10 years ago, and they're driving AI inclusion today. That really hasn't changed. Maybe you've heard me say before that content is king, customer experience is queen, and data is the crown jewels, right? That's what we're still seeing, even with artificial intelligence. One thing to keep in mind here is that we're talking about a do no harm principle, a first do no harm principle. If a GEO tactic is going to hurt your search performance, it's probably not going to work for artificial intelligence either, and certainly not in the long term. The tactics that work for both are the same: quality content, earned external references, active review management. The brands that win in AI today are the ones that have inherited that position. The question you should be asking right now is not how do we acquire AI visibility? It's how do we build the brand that AIs value, that produce AI visibility as a byproduct of being a brand that AIs value. Now, if the fundamentals are this clear and the pattern is this consistent, why are 82% of companies still stuck in the value gap? Why don't they just do the thing? Every new gatekeeper's entry into the market included a period, and includes a period, where taking the shortcut looks like the smart play. In Google's case, it was things like trading links, link building programs, even before you had to pay for them. In social media's case, it was building organic reach and building your follower count. In OTAs, it was things like low-cost early commissions. And with AI, it's things like GEO vendors and AI content farms and, churning out high volumes of low-quality, low-cost content so that you show up. But those all stop working at a certain point. They realize, hey, people are spamming this, so Google shuts that down. The social media channels say, we need to actually earn money off of these folks, so we're going to pull back the algorithm and change what your organic reach is. The OTAs are saying, we're contributing a lot of business to your hotel, so we need to raise commission rates. What makes you think that the AIs are going to do anything different? We don't know exactly when that will occur, but I'm really confident it's coming because we've seen this happen again and again and again. Now, I want to be very fair to people who have gone down this path before and chosen that path. It's not a scam. It's a trap. It's not a scam because it works, at least temporarily. That's what makes it so dangerous. A scam would be easier to resist. You're savvy enough. The people who've done this are savvy enough to know that if you're not getting value out of this thing, you would never put your efforts there. You would never put your money there. So the people who have taken these approaches, the people who have worked with these channels, are not fools. They're not like getting themselves scammed. What they are doing is they're saying, hey, this is producing results for me. I should double down on this. I should triple down on this. That's what makes it dangerous, is the fact that it actually does work. The challenge is that you end up owning visibility, but not the relationship with the customer. The shortcut is always attractive exactly at the moment when you need it the most, because they're helping you reach customers you haven't reached before, and usually at a relatively low cost. That's fantastic. But all that you see at that point is the upside. By the time the cost becomes visible, too many people find themselves in a position where they've built far too much of their strategy depending upon that thing. That's not a great place to be. Marketing leaders need to think in terms of, when is this a genuine investment in our foundations? And when is this a shortcut that's dressed up as a strategy? I would think there's a couple of ways you would test this. The first is to ask whether this investment would matter if AI changed tomorrow. If we look at things like expert authored content, or review velocity programs, or first-party data infrastructure, or earned media from credible sources, those are going to improve your business regardless of which AI model is dominant 6 months from now, 12 months from now, 18 months from now. If the investment only works because of how ChatGPT works in Q2 of 2026, that's probably a warning sign. The other test you may want to say is, does this investment compound its value over time, or does it require a reset every couple of months? Shortcuts work. Foundations compound. A review earned today is in the training data for the next model update. Content that gets cited once tends to get cited again. First-party data gets more valuable as you collect more of it from your customers, as you earn more of it from your customers. If an investment value has to be reinvested every time the platform updates, that's a shortcut. If it compounds regardless of the platform updates, then you're building a foundation for success long term. When you walk into your monthly review or your quarterly review and you're making the case for the budget that you need going forward and for the budget you've already spent, you should not be thinking in terms of, we shouldn't invest in AI. That is not a thing I'm saying here, right? You should be saying, we should invest in AI the way businesses survive every platform shift invest. We should be investing in the things that improve our business and compound across every platform, not only in things that work for this particular algorithm or this particular artificial intelligence. One of those has a long-term opportunity for you. One of those means you're going to keep throwing money after money after money every time the algorithm changes. So when we think about budget categories, are we talking about expert authored content that earns citations? 100%. Are we talking about review velocity programs? 100%. Are we talking about a first-party data infrastructure? 100%. If we're talking about people selling you, you're going to appear in the AI and you're going to appear atop every single time, you might want to take a really close look at that. You might want to start small and test, because maybe they do know something. But you want to make sure you own the result, not just the visibility, before you double down there, before you try to scale this up. The businesses that I have watched navigate every platform shift without getting captured have all had one thing in common. And it's not that they saw the future first. It's not that they were smarter than everybody else. It's just that they never fully gave up the direct relationship with the customer. They built a long-lasting brand platform, a long-lasting customer relationship that survived and thrived every time the platforms shifted. They didn't chase any short-term wins at the expense of the long-term opportunity. I have had this exact conversation through the Google updates and through the collapse of reach on social media, on Facebook and places like that, and with hotels and OTA commissions. And now with AI, some of this isn't, that I'm predicting the future. I've seen this and seen folks get burned by it plenty in the past, including me from time to time, right? This is hard-won experience that you've eventually learned, hey, maybe we shouldn't chase the shiny object, but we should build something of lasting value. The folks I've worked with who've acted on these conversations and learned from them and applied them, and the folks who aren't even clients who figured it out on their own, they're the ones who are doing great. They're the ones who have options to continue to improve over the long run. This is not some sophisticated or, brand new AI strategy. It's a 15-year pattern that keeps working no matter who the gatekeeper is next. And ultimately, that's the place where you want to be. That conversation was from April, a few weeks before Big Tech's earnings confirmed every pattern I described. You and I both know that Google's search revenue didn't grow 22% because they got lucky. Amazon didn't build sponsored prompts by accident. This is the same game being played by gatekeepers. And you've got the same window available to you, at least for now. Next week, we're going to get specific. What AI search is doing to your traffic right now, and the framework you can use to make sure you're on the right side of it. If this episode gave you a bigger picture, a better picture of what the long game looks like in practice and how you can play it more effectively, do me a favor, send it to some colleagues who are currently staring at their 2026 budget and wondering where they should put their money. It might save them and your business from spending it on the wrong things. You can find the show notes for this episode at timpeter.com/podcast. And if you're ready to go deeper on making your brand the answer that AI reaches for every time, my book, Digital Reset, Driving Marketing and Customer Acquisition Beyond Big Tech, is the roadmap you're looking for. You'll find the link in the show notes. Thank you so much for listening. I genuinely appreciate you. Until next time, please be well, be safe, and be excellent to each other. I'll see you soon.